Well, hello, everyone. This is Cynthia Tomain with Interactive Brokers, and thank you for joining today's webinar being brought to us by Hammerstone Markets. Today, we're going to be discussing what constitutes quality news for today's traders, or why a good financial market feed is a necessity for today's traders. So with that, I would like to introduce you to Patrick Burke, who is the Director of Sales for Hammerstone Markets. Patrick, I'm going to go ahead and pass you the controls. If you could show your screen, let's get underway here this afternoon. Thanks for joining us, Patrick.
Thank you, Cynthia. Good afternoon. My name is Patrick Burke. As Cynthia said, I'm the Director of Sales here at Hammerstone Markets. Hammerstone is a financial news media company whose main product, the Hammerstone Forum, is a real-time, interactive, streaming financial data and news feed servicing institutional traders and active investors. We were founded in 2001, and we've become an essential institutional trading desk fixture over that time. My background is in institutional sales trading. After 2 years as a clerk on the floor of the New York Stock Exchange, fresh out of college, I moved upstairs, where I spent 25 years as a sales trader covering a variety of hedge funds, mutual funds, and money managers. Which leads us to the theme of today's Interactive Brokers webinar, how quality news sources can help in making trading decisions during turbulent markets. I'm going to discuss the kinds of investors that require breaking news, the institutional news landscape, its barriers and drawbacks, the different types of financial news sources, what traders should look for in a news source, and finally, the benefits of finding a news aggregator or service that is able to bundle all the information into an affordable, one-stop source. Our first topic is what types of investors need breaking and trending financial information? In today's uber-connected world, that is a great question. If people can be instantly alerted to every political development in Washington, any news about or from their favorite football team, singer, or actor, shouldn't anyone who has money invested in stocks and bonds also know exactly what is going on each trading day? Well, actually, unless you are an active trader, sometimes knowing less is more. As I just said, those that do not need breaking news are long-term retail investors, affectionately known as mom and pop investors. For these investors, the daily, weekly, monthly, and quarterly fluctuations of the market should not matter. That is not to say they should be oblivious to the financial markets and their investment portfolio. Quite the opposite. They should look to acquire as much financial knowledge as possible. However, a long-term investor with a solid investment plan does not need to know that American Airlines has trimmed their average third-quarter fuel price estimate by 2 cents. It just doesn't matter in their big picture. But there are many people that want that information, and they need it quickly. As stated, those that do need to follow the news are Wall Street trading professionals and active investors. These are the people responsible for that final leg of the trading decision. These are the traders, the analysts, and the portfolio managers working at mutual funds, hedge funds, IRAs, family offices, proprietary trading firms, and self-directed traders. Breaking news and information flow matter to these individuals. Whether it's Fidelity's head trader and he's adding to a position in Facebook, or it's a prop trader buying shares of Facebook on the lows of the day, looking to take advantage of a negative piece of news. Mentioning that information flow matters to these individuals is a gross understatement. It is their lifeblood, and obtaining this information can be incredibly complicated and an expensive endeavor. Next, I'd like to talk about what does a live institutional financial news feed offer trading professionals. A streaming real-time financial news feed essentially offers access to a private club on Wall Street. These people are receiving financial news quicker than anyone else. Many of the barriers to this club have fallen with the advance of technology. The club still has barriers, keeping many active traders and also presenting drawbacks due to their scope. To understand these barriers and drawbacks, we need to look at, one, the institutional news landscape. The majority of Wall Street's banks and brokers, hedge funds, mutual funds, and money managers will all pay over $30,000 a year to access news and other bundled services from the top financial news organizations. And that is $30,000 a year per trader, per analyst, per portfolio manager. The high price does have its privileges: direct access to much of the street's breaking news, industry-leading dynamics and databases, and the ability to communicate directly with other subscribers through their exclusive messaging services. Immediate access to this information and data has the effect of turning Wall Street's institutional trading desks into a private club that has an edge over traders who are not privy to this information firsthand. How does one get inside the gates? Well, you have to become a Bloomberg, a Reuters, a Dow Jones, an S&P Global, an IHS Market, or a FactSet subscriber. And these are not cheap. Just the word Bloomberg haunts Wall Street CFOs at night because of its expense. I'll Bloomberg you. It's a phrase that is heard every day across Wall Street and at night during dinners or during conferences. And to reply to it with a, sorry, I don't have a Bloomberg, let me give you my email, is like a punch to the gut for the person that has to say that. Wall Street firms, large and small, will pay over $22,000 per user to avoid making that reply, even if their trader or user only uses a fraction of the many functions a Bloomberg terminal offers. The barrier to the institutional club is quite high, and combined with a must-have Reuters Newswire subscription, as I stated previously, a trader's seat will cost his firm over $30,000 a year. Bloomberg's pricing power, due to its must-have popularity, has long tormented Wall Street's cost cutters to no avail so far. Their analytics, data, news, and messaging are industry leaders. However, once you're in this club and you've paid up, and you're beyond the barrier, can there possibly be a drawback? Well, yes, there is actually, because there's such a thing as too much of a good thing. The Bloomberg and Reuters news feeds are now flying by, and that is the problem. Traders are flooded with a deluge of news, much of it repetitive and non-investment related. Attempting to keep up with multiple news feeds is a full-time job. Reuters alone has 6,000 active global sources from 87 countries. Bloomberg, Reuters, and Dow Jones will not miss a story. It's what they do. They report the news. However, an active trader can miss a story, many stories actually, that don't help them trade. But traders cannot miss the story that helps them find a trade that possibly makes them money or saves them money. It's easy for such a news story to get lost in the sheer number of headlines coming over one's computer. Windows of opportunity can vanish while one attempts to keep up with the massive amounts of news and data. So can one go it alone without entering the club, without crossing the barrier? Not every firm, not every trader can afford or even want the major news feeds and their high costs. Between the internet, Twitter, blogs, free news feeds, feeds accompanying brokerage accounts, there are many ways to attempt to be on top of breaking news and data. The problem here is twofold. Will the news be real time or will it be late? And how does one simultaneously monitor dozens and hundreds of sources? You'll either be overwhelmed, underwhelmed, or maybe you just get it right. It's safe to say that no news service gets it just right for every trader. Many try. Next, I'd like to go through the types of news sources that help today's traders. As I mentioned before, there are the major news outlets. You have your Bloomberg, Reuters, Wall Street Journal, and the Dow Jones, the Financial Times, Business Wire, the New York Times, CNBC, the BBC, and many, many global news outlets. For example, lately with the U.S.-China trade war, the South China Morning Post has been breaking news on the U.S.-China trade war. Looking at the South China Morning Post is now a must-have for traders. These major news outlets are also the source of repetitive and trivial stories, and in most cases are subscription-based, ranging from tens of thousands of dollars, as I mentioned before, to hundreds of dollars a year per subscription. Another type of news source that helps traders are the financial news channels, like Bloomberg, CNBC, and the Fox Business Network. CNBC and the Bloomberg Business Network have proved themselves to be indispensable with their ability to break news, show live coverage of major events like the Fed's Q&A, congressional hearings, and presidential coverage, etc. They also do a great job of interviewing Wall Street and corporate America's leaders. But of course, with that comes a lot of filler in between. Outside their coverage, which is outstanding, of major events, tradable news items are often and certainly missed. Another type of news source that helps a trader are websites and blogs. There seems to be as many financial websites as there are stars in the sky. Of course, all the major news outlets and financial channels have their own websites with free older information and paid subscriptions for varying tiers for more up-to-date news. Additionally, many of these subscription-based financial websites are not news-orientated, but instead are investment-geared, like TheStreet.com or Motley Fool, and they're focused on longer-term investing. Other websites offer investing chat rooms led by trading gurus, or sites like StockTwits, which essentially offer a chat on any single stock there is out there. Like the entire internet, some sites are great, some are not. And in the case of blogs, all should be approached with skepticism until one has vetted them. Another major news source are the Wall Street banks, brokers, and boutiques. Wall Street banks, brokers, and research boutiques are still the number one game in town. Why is that? They have analysts. The analysts have upgrades and downgrades. They have bankers with IPOs and M&A. And all these factors can cause short-term stock price fluctuations. If an analyst is an axe on a stock, meaning he or she is respected by the buy side because of their knowledge and their ratings history on stocks, they can cause immediate price movements in individual stocks and industry sectors with their comments or rating changes. These analysts don't necessarily have to come from the biggest bulge bracket household names like Goldman Sachs, JP Morgan, and Morgan Stanley. An analyst who is an axe can come from mid-tier brokerage or a research-only boutique. The information from these firms needs to be part of any trader's news flow. Next, there are alternative sources, which day in, day out are becoming less alternative, but more mainstream. Twitter is obviously one of the most popular. Wall Street discovered Twitter over 10 years ago, and traders had another tool to help them navigate the financial markets. If the overall market or an individual stock was spiking, and the traditional cable networks and major news feeds did not offer any explanation, a quick search on Twitter could sometimes do the trick. Twitter was a lot smaller back then, and of course you had to trust the tweeter, just like today. But 13 years on, after Twitter was founded, it has grown into a huge source of financial news, whether it be objective or subjective. There are scores of financial Twitter accounts reporting breaking news. Many are sector specific, searching the FDA site for breaking news on drugs and trials, scouring Edgar online to find tradable filings among the millions of filings with the SEC. The problem with Twitter in 2019 is the tremendous volume of financial tweeting. Much like the huge amount of news produced by the major news sources, Twitter's volume makes it very difficult to locate value-added tweets. And of course, I must now mention that Twitter has now officially become the most important market-moving factor in the world over the past 3 years, but really over the past several months. Watching a certain Twitter account has become the biggest game in town. A year ago, this account might move the market once a month. 6 months ago, this account might move stocks twice a month. However, over the past several months, market-moving tweets can occur daily, often multiple times overnight or during the trading day, whipsawing the world's financial markets on the whim of the tweeter. Just this morning, at 9:49, presidential tweet, excuse me if I gave away the tweeter there, his 10th in an hour, surprised the world when it announced that the Chinese vice premier would visit the White House tomorrow upon the conclusion of the U.S.-China trade talks, immediately causing a rally of over 100 points in the Dow Jones Industrial Average. Another alternative source are activist research firms. These are short-biased activist research firms such as Muddy Waters Research, Citron Research, or Spruce Point, and a slew of anonymous short-based firms that post their reports on Twitter with links to the reports and the piece. By establishing a short position in their target company prior to publishing their negative report, they are following the investing style originally employed by celebrity short sellers like Pershing Square's Bill Ackman or Greenlight Capital's David Einhorn. These activists move stocks to mixed reviews to the extent of their following and the quality of their research, and they are a must-have follow for all traders in today's markets. Another source are the government regulators and agencies. As I mentioned on Twitter, certain Twitter accounts dig deep and look up and try to find the regulatory filings and announcements from the FDA, the SEC, and the FTC, etc. These accounts find the information often before mainstream media, making their fact-finding another invaluable resource. And finally, we arrive at what I feel is the most controversial type of financial news source, trading desk chatter. It's a thin line. Let's go over the pros and cons of trading desk chatter. Since the 24 traders congregated underneath a buttonwood, supposedly, on Wall Street in 1792, trading chatter has been as much a part of the news flow as any piece of information traveling across the street. The problem with this information is it cannot always be verified. If trading desks are hearing M&A chatter about a certain company, take, for example, the once high-flying action camera tech company GoPro, a company that has been the subject of multiple instances of takeover chatter over the last 4 years, actually 17 times according to Hammerstone's records. Can you trust that chatter? For example, this past September 27th, GoPro was up 18% intraday on this M&A chatter. Nothing ever came from it. There was no activist bid the next morning or since, but multiple sites reported on the chatter and the stock rallied. Thus, the quandary that a news service faces is whether to post the GoPro chatter. I think part of the moral quandary is the origin of the 18% move on unconfirmed chatter. There has to be a first mover or a first headline. In many cases, an M&A rumor may disseminate from the respected M&A research firm Deal Reporter. Yet on the other hand, there are certain financial news websites which specifically traffic in rumors and innuendos without any verification or disclaimers. Should the chatter from the latter be repeated despite the absence of a source? Our philosophy is that if the stock is subject to unverifiable chatter and it is moving, we want to let our clients know. But we always add a disclaimer so clients understand the nature of the chatter. What we do not wish to be is the original poster of unconfirmed chatter. There are news feeds which do not have a problem being the first to post an unconfirmed rumor. We do. We have a problem with that, which is why we always let our clients know the nature of M&A chatter, whether it is deal reporter or an unconfirmed source. Next, I'd like to talk about what a trader should look for in a quality news service. It's personal. It's what one wants out of a news feed. First, let's start with objective news or subjective company and market calls. Do you wish to form your own opinion or let others guide you? Do you want a combination of the two? Very early in my career, I worked at a small institutional broker-dealer that employed a long-time market prognosticator who put out a note each morning with his thoughts and market picks and stock picks. One of our accounts was a brand new hedge fund that had yet to leave New York City for Stanford and later for investing fame, or some would say infamy. The hedge fund's namesake ran the direct wire and told my 24-year-old self in no uncertain terms never to send that morning note over again. He did not want his team of traders influenced by someone else's market calls. Another thing traders should look for in a quality news service is whether it's trustworthy or it's been vetted. Do you trust the news feed that you've signed up for? In addition to breaking news, does it deal in unsubstantiated rumors? Certain news aggregators and Twitter feeds, like we spoke about before with chatter, use rumors as a selling point. Another quality that they should look for in a quality news service is timeliness and speed. The definition of real-time news varies greatly on financial news feeds that promise it. Some feel that 5 minutes is real time. Others actually feel that 25 minutes is considered real time. Going back to Twitter accounts, especially the one we talked about earlier a few minutes ago, this certain Twitter account has become the single most important trading factor in the past few months, 2019. Speed of news directory is more relevant than ever in today's markets. And it's not just short-term traders that need to be current. Whether it's a tweet or response to an earlier tweet from its intended target, all Wall Street traders and active traders need to be in the loop. No trader, investor, portfolio manager is immune from these market-moving tweet storms. I feel for the first time in years, a trader or a PM steps off his desk at his own peril or cost due to market-moving news that can occur at any time. And finally, another topic that traders should look for in a quality news service is context. Context is defined as the circumstances that form the setting for an event, statement, or idea, and in terms of which it can be fully understood and assessed. Traders need to make decisions within seconds, using all information available. Within seconds, and in many cases, they need to go with their very unscientific gut feeling, combined with any context they themselves have accrued that helps make that decision. Very obviously, a quality news feed is one that can add context to a news event and add it quickly to aid the trader. In conclusion, I'd like to talk about the solution for all this, for all the news and noise that's affecting today's traders. I think I've shown how today's traders are bombarded with news all day long. The sheer amount of news flow and the huge number of sources across many platforms has turned following the news into a full-time job for traders. They need help in the form of news services that promise to aggregate the massive flood of news into exactly what a trader needs. And what does an active trader need? For starters, I believe the barrier needs to be torn down, and that barrier is cost. All financial news aggregators cost substantially lower than the prohibitive cost barrier mainstream financial news companies charge for their data and the flood of news that follows. Costs range between $70 to $500 per month or per year, much lower than the $30,000 that the institutional traders are charged. Another solution is sources, quality sources. Pulling news and data and information from all major news outlets, television, Twitter, websites, blogs, primary sources, press releases, conference calls, and Wall Street. A good news aggregator has to have many sources, all vetted and all established and all ready to go. They also need good content that filters out the noise, focusing on the news that traders need and that strengthens the trader's skill set. This content is not just news. This content updates price action, technical levels, analyst rating changes, options information, options flow, market on close imbalances from the floor, unusual activity, stocks that are on highs of the day, lows of the day, event calendars for the week, for the day, for that afternoon, 52-week highs and lows. Any information that's going to make a trader better, any information that's going to open their eyes to a new situation where they can possibly profit or save their firm money. Additionally, speed, as we've talked about before, weeding through the onslaught of news inundating traders to seek and pull out the news that matters and putting it front and center immediately. And finally, context and analysis. The ability to add context to a news item immediately, and thus helping traders, investors understand a breaking news item quicker and enabling them to craft their reaction to it. I want to thank you for giving me the time to give this presentation. I'm going to move on to any questions right now. Thank you. I do have one question here to start. What makes Hammerstone differ from other news aggregators? Hammerstone has a crucial difference. It's our community of traders. Hammerstone has over 1,000 institutional traders from some of Wall Street's biggest banks and hedge funds as its subscribers. The Hammerstone feed is interactive. It's heavily monitored, so there's no monkey business. The subscribers can ask questions to the community, and they can add any news they feel is important. Our team is comprised, the Hammerstone team itself is comprised of former PMs, analysts, and traders from the buy and sell side. So together with our community of investors, we feel that we can unearth essentially any news item, whether it's breaking or going across the street. I see a second question here that I'd like to answer about how can someone sign up for the Hammerstone feed. We are offering interactive broker users a 60-day free trial of our news feed. You can register at our website, hammerstonemarkets.com, using the code IBKR. In addition to the 60-day free trial, if you sign up at the end, you'll receive 25% off all our products. And I see someone's asking if they can see a sample from your news. So if you go to our website, we have samples of yesterday's feed. And obviously the easiest thing to do is to sign up for the free trial. You'll be logged into the feed, and I could talk about it all day long, but really to experience it is to see it in action, is to understand what it is and to appreciate it.
Well, Patrick,
another
Patrick, what I would like to do is jump in and show folks where you can access Hammerstone Markets information on the Interactive Broker website. What I am going to do right now is let me grab the controls for just a moment, and what I will do is let's bring in our website. Now, from the website, I do want you to see that you can access Hammerstone information, going underneath the pricing menu, notice here you'll find research and news. Going into this window here, if you simply do a control find, let me see, I'll bring this up. Notice I'm going to scroll down. And you'll find Hammerstone Markets are available lower down on that page. Now, also do want to show you the information. This happens to be on the Hammerstone reports that we do currently have available on our platform. If you want to learn more about those reports, notice there's that Learn More button that's available down below. And this will give you access to the information, plus where you can sign up. You'll also find there is access to a sample report that's available here, and that's actually opened up on a separate page. So let me bring this back into visibility here, and I'll take it into size. And this is just a sample of the reports that you can get through Hammerstone on the Interactive Broker platform. And speaking of which, I also want you to be able to locate that information. Well, let me see. I'm going to bring up the Trader Workstation. Let me see here. Let me minimize this and I'll get back into this window. Okay, here we have it. Now, to access the information from the Trader Workstation platform, now called IBKR Pro, you can go to the New Window button and notice that down below, underneath the information system, you'll find Analyst Research is available, and those products that are accessible at no additional charge will be listed underneath the subscribe section. We are working on a new feature, adding Hammerstone into the platform here, but for now you can go in and access the reports directly from here. Now, getting into those reports, also do want you to see, let's go back to the website for just a quick moment. And notice here that there's also a link to the Hammerstone Markets website where you can also go in and subscribe to their promotion that's going on now. Remember, you'll find that from this page here, go into start that free trial period and simply add IBKR in the promo code and you'll be directed then for that free trial period. So with that, I see there's another question that's come in. So let me, are you monitoring that right now, Patrick?
Yes. Yes, I see the question. So the Hammerstone feed, as I mentioned before, we mentioned technical levels, unusual options activity. We essentially try and put as much information as possible in front of our subscribers to help them make a trade. There's several ways to receive our feed. One is over our app. Our app enables users to create watch lists, to set alerts, whether it's visual or verbal, and to set up many different ways to follow stocks and make sure that keywords aren't missed, anything, and to essentially make sure that you do not miss a news story. And Cynthia, I don't see any other questions at the moment.
Okay, well, what that's going to do, thank you very much, Patrick, for an informative session here today. I also want to remind everyone that we have been recording today's presentation, and we'll be sending each of you a direct link to today's recorded playback in case you want to come back and review those concepts that Patrick went through here this afternoon. So with that, we are going to conclude our session today. I want to thank all of you for participating with us, and remind you to watch your inbox later on today for those direct follow-ups. Well, with that, thanks very much to Hammerstone Markets for making today's presentation available. And also thank each of you for taking some time out of your day to learn a little bit more about Hammerstone. Well, thank you all. You can exit today's session using the X in the upper right-hand corner of your screen. Thanks, everyone. Have a great rest of your day.